Hello again, Maverick traders, and welcome out to your weekly currency room. This is Sankit here, where we'll be breaking down this week's price action and talking about our upcoming week ahead. And there's a lot to unpack this week, so let's take a look at our broad market analysis, take a look at the currency basket, see where the movement's happening, and talk about the opportunities for the upcoming week ahead.
Disclaimer: this video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So starting with the last week's recap, again, we are seeing markets turning bearish. So the equity market sells off and now they are right at the key support around 4,200. So that's a big change in the markets as it's been holding in for the most part, but now it looks like the market's in trouble. The bond yields continues to be following the same narrative. It continues to go higher and there's really no reversal sign as of yet. Now the US dollar, mostly flat. We have seen the dollar gone back to the previous highs, but we haven't seen a breakout. And again, this week had the perfect recipe for the dollar to break out, and something we have to pay close attention to, and we'll take a look at the charts. Now, looking at the last week events, so just to highlight the key events, we had the Kiwi CPI, lower than expected. We had the Canadian CPI, lower than expected. The CPI numbers are lower across the board. The US data, again, continues to outperform. The retail sales was stronger than expected, and that's, again, fueling to the narrative of rates being higher for longer. So that's where we are at. Nothing has changed in the markets. We had the employment report out of the Aussie, and that was a mixed report. And then we have, again, look at the unemployment claims, now down to 198,000. So, again, that data has been pretty awesome across the board out of the US. Now, the retail sales out of the UK was negative, but overall, didn't really see a big impact of that onto the British pound. So overall, the narrative continues to be the same. Now the equity market seems to be following the sort of downside in the overall markets. So let's take a look at last week's review and talk about how did we start this week. So we went in this week with this velocity score where the CAD and the Swiss franc was the strongest, followed by the dollar and the yen. You can see the European currencies were weak and the Aussie and the Kiwi were weak. So let's see how things have moved on this week. So let's just start with the percentage return, and we have seen the S&P down 2%, World Stock Index down 2%. So we're seeing a sell-off across the board. Crypto was up nicely 7% this week. Gold, again, continuing to go higher on this risk-off sentiment out there. And the oil market had a continuation of that gain, but that gain was much smaller compared to what's happening in the metals market. So let's just start with the chart here. So the S&P, you can see this is where we talk about how this is a bear rally pattern, but we were kind of stuck right in the middle here, trying to figure out which way it wants to go. And here we are in the last 3 days, we have gone back to the previous support. So at this point, it looks like markets are testing a key support, and a break of the support can extend further losses in the markets. Again, that's when people will start to take profits if we break below this 4,200 key support area. So that's something we need to pay attention to going into next week. Now, let's just start with percentage returns. So the equity markets had a big move. The gold market had a big move. Even the crypto market had a big move. But now when you take a look at the movement in the currency markets were a lot more muted. And again, this is a good thing and a bad thing where, you're not seeing a big volatility in the currency market so you can hold your positions for longer. But at the same time, we are getting less opportunities. We're just getting, concentrated opportunities in certain currencies like the Swiss franc, which again is up again 1.32% after going up 2%. So the Swiss franc basket is up about 4% in just a short 2 weeks. Here we have the Kiwi down 1.18%, but then look at the Aussie. Aussie was actually stronger for the week. So it was the currency market did its own thing. It is followed its overall sort of weakness, and we haven't really seen a big fluctuation in the currency market, regardless of what's happening in the equity markets. So that is something we got to consider as we go into next week and take a look at opportunities. Looking at the crypto markets, you can see the Bitcoin was the best performer, followed by the Bitcoin Cash, and Ethereum and Litecoin continues to be on the lagging side. So let's take a look at last week outlook and take a look at this week outlook as well, as we are now looking at a -3 in the equity markets. So we have now gone back and forth, +1 to a -1, and now the market looks bearish. And we looked at the chart for the S&P, and you can take a look at the chart for the bond yields. They have again continued to go higher. So something got to break. Something has to give up here to really normalize some of the market movements here. But right now, I think the equity markets, if everything continues on this path, the equity market looks like could really break lower. Now, looking at the crypto markets, you can see we're getting these spikes, but these spikes are not as consistent, where we got this spike just a week ago and then we kind of give back the gains, quite another spike over here. Again, overall, I think there's better movements happening outside of the crypto world. So let's take a look at the schedule. And next week, we are back with a lot busy schedule. So starting again on a Tuesday, we have the European numbers, the services and PMI, and the manufacturing PMI. We got the employment report out of the UK. We have the CPI numbers out of the Australia. And I just want to highlight that how these CPI numbers have been coming out weak. So I think it's fair to say that it's better to go in with a weaker expectation for this CPI numbers. Now, the Bank of Canada is due on a Wednesday. And with this less than, we were expecting a stronger CPI numbers out of Canada, but it wasn't the case. So it really gives a breathing room for the Bank of Canada not to raise rates. So I think the Bank of Canada not likely to raise rates next week, but we'll see how this will impact the Canadian dollar. We also have the ECB rate statement as well, and again, they're likely to hold as well. So you can see that bond yields are rising, but like last year, we are not seeing the central banks raising rates or the inflation going out of control. So it's I think the bond market is really having a big impact across the board. Now, taking a look at the rest of the numbers for Thursday, we have the advanced GDP from the US, and on Friday we have the PCE. So there's a handful of events next week, and I want to emphasize that we're getting a lot of movement, especially on these news events. So I think the trading the news events is a bigger component now than it used to be, because now we are getting less activity outside of these catalysts. So we need these catalysts to get that move going. So make sure you're paying attention to these news events. Now, looking at this week's, again, I think markets, you got to check this key support, and a further break will trigger more sell-off. So again, if you're trying to figure out risk on or risk off, that is something to keep an eye on. We have two central banks next week. That could move the euro and that could move the CAD. So those two currencies we'll be paying close attention to. And then we have other economic data, especially out of the US. We have the GDP and the PCE. We'll see. I mean, all the data has been stronger for the US, and that again probably fueling this bond rally. And unless we start to see those number weaken, I think the bond market's likely to stay on this uptrend here. So it's something to pay attention to, especially if we see a change in the US data. Now let's do a quick currency analysis and take a look at where's the big movement. So let's just start with the technical analysis on the cryptos. So you can see that on cryptos, we are now seeing a better trending score, especially on the Bitcoin and the Bitcoin Cash. So very similar story. They're going up, but again, I've said that before. These movements are not as consistent, and we look for consistency as we want to catch up a follow-through move. So I'm just going to quickly browse through, and I would say the Bitcoin looks the best, and the Bitcoin Cash. Ethereum and Litecoin, they're on the lagging side. Now let's take a look at the currency market outlook. So let's just start with the dollar. And I think dollar is the one that has definitely left some traders confused, because we talk about the relative strength, and the dollar has the relative strength. We have the trend score that's a +2, and we have a velocity score that's a +2. We have the catalyst, we have the economic backdrop the overall market backdrop with this flight towards safety. The gold market's taking off. The oil has taken off. We have a typical flight to safety, but we're not seeing that translate into the dollar, which is interesting here because we are seeing the Swiss franc now acting as a safe haven currency, but not the dollar. So this is again, I would say this is where the dollar is. I'm not that interested in trading dollar here. Why? Because dollar is not, first of all, breaking out. I want to get in if it really breaks out. And the whole October, it had many chances to break out and it hasn't broken out. So I think that's something I will be looking at before jumping into the dollar pairs. At the same time, don't want to sell the dollar because again, velocity is still there, holding the pattern is still holding there. So dollar is not a good short, in my opinion, and it's not a good long right now based on the price action. And if you take a look at the yen is going sideways as well. Again, yen is kind of in this holding pattern because the market sentiment is negative. But as long as market stays weak, I think the yen can stay where it is right now. The only time I see yen weakening is that when the equity markets rally. And take a look at the Swiss franc. Again, this is what you expect from the dollar, and we're getting it from the Swiss franc. And interestingly, we went from a -2 where we were, starting October, now to a +2. So that's a big change in just a short 2-week period. Velocity score still holding in there, no reversal pattern whatsoever. So what do you do in that situation? You stay on the direction. If you think it's gone up too much, then that doesn't mean that you want to short it at this point because right now the price action is not there. I mean, whenever you see a run and a base and a run and a base, it means that it just wants to go higher. You need to see that price action change in order to call for any sort of reversal. But there are no reversals as of today. Now, looking at the euro, and euro is also following suit for the Swiss franc. And again, right now, a good relative velocity score, and the trend score is getting better as well. So again, this is something will be important to watch as we get into the ECB press conference or rate statement on Thursday next week. Now, talking about relative weakness, and look at that, British pound is showing relative weakness. If you take a look at this chart pattern, we came back and we just kind of same place. Remember how Swiss franc came back and then now it just rallied all the way back up. This thing is not rallying all the way back up. This thing is trading within a range. So this is still a bear, sort of a low base pattern here. So something to keep an eye on. I don't want to be jumping on a long or short until we really break out significantly higher or lower. Shorter term, sure, there's a +1 velocity, but like I said, I don't like the daily chart on this one. Now the CAD, take a look at CAD. So we had the Canadian dollar, which again, kind of doing what the US dollar is doing. We had a big drop over here, but we haven't really gone sideways pretty much the entire month. Now, taking a look at the next week, we have the Bank of Canada, but we'll see which way it really breaks one way or the other. But personally, I think that the CAD is still tied to the dollar, which means that look for a breakout if the dollar breaks out higher or lower. But I think until then, it's in a holding pattern as well. And lastly, let's take a look at growth currencies, Aussie and Kiwi. So Aussie is still also in the holding pattern. Again, it's a -2 trend score, but you realize that it's trading within the range. Until it breaks below the support here, we can't really go in as a full-on short on the Aussie. At the same time, we don't want to be buying the Aussie. So I think right now the price action has been making a little lower high, and we want to be selling the rallies in the Aussie here. And then lastly, the Kiwi. What a turnaround. Take a look at how strong Kiwi was and how weak the Kiwi is now. So we have gone from a +2 now to 1, 2, 3, 4, 5, 6, 7. So out of 8 days, 7 down candles. That's a pretty bearish price action and no reversal in sight. So this one still on the bearish side. And again, same thing. You think it looks extended, but look what's happening. It rallies, it sells off, it bases. It sells off, it bases. It's not even a rally in store there. So we have to just continue on with that price action. Of course, we are getting to the point in this basket on the Kiwi where it'll find some support. But right now, I think we are getting close to that level here. So keep a close eye on that level. So going into this upcoming week, again, let's take a look at the trend score and the velocity score. So the trend score is pretty clear. Dollar is still in an uptrend. Euro and Swiss franc is in an uptrend. Z and Kiwi is in a downtrend. So that's pretty clear. That's where the relative strength and weakness is. That's where the trend is. Now, are there any sign of reversals yet? They're not. So what we need to do is, in the absence of any sort of a reversal sign, we just have to continue on with the same narrative that we have this week, especially if the equity markets weaken. What do you think is going to happen? Flight towards safety. Aussie and Kiwi likely to get weakened further, and we'll probably continue to see an up move in the Swiss franc, euro, and even the dollar. So again, dollar, we'll be looking at the previous high on the dollar and see if it really breaks that concession point. But till then, let's just keep the dollar on the sideline here. So let's just jump into our trading view and take a look at possible trades setups.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
And looking at the trade setups here, as you can see, let's start with the S&P chart, closing at the lows of the day. So which means that as we go in next week, it's going to put some downward pressure in the markets. Now, let's just start with some decent setups here. So we know that the dollar is doing well and Aussie is doing weak. Let's just start with the Aussie and the dollar. And Aussie dollar, I think this is setting up for a nice little short here. So a break of the support, which is about 62.86 area, will then open up a further downside risk, which is again not too far from the last year's support at 61.76. So that's where we are at. We have a nice little 150 pip to be had on the downside before it can hit the previous support. But quite a turnaround in the Aussie dollar. As you can see, we are back at the lows from last year. Kiwi dollar is in the same pattern here. You can see Kiwi dollar did break that support. And right now, I think Kiwi dollar can easily get towards that 55 area, for as far as the continuation of these patterns goes. So Aussie dollar, Kiwi dollar looks good. But, where is the price movement happening? It's in the Swiss franc crosses. So take a look at how Swiss franc cross is moving. Let's start with the daily chart. As you can see on the daily chart, we are almost back at where we started from. So it's interesting that how, we were looking at this sort of a change of that trend. So we were quite weak, and then we had a nice little big trend here. And here we are back at the lows there. So at this point, it looks like it could break lower. Again, right now, prices do look extended. But again, these are the market conditions where we continue to see oversolds remain oversold and overbought remain overbought. So the narrative really hasn't changed. Now, same thing goes with the Kiwi Swiss franc as well. I mean, look at that. Back at the support here. So not really finding any reversal sign yet. We are definitely getting oversold. I understand, if you have the reservation, you don't want to jump in after something has dropped so much. I think this is where you can easily stay out of the markets until you start to see things start coming in together. Especially as the Swiss franc looks extended, I would love to see the dollar sort of pick up that slack and start to move higher. And I think in that case, next week, again, we have already gone 20 days this month, and not really had a breakout in the dollar. So we'll continue hunting in that same direction until we get a breakout. And if it does break out, I think Aussie dollar, Kiwi dollar looks the best. Again, European currencies are not doing the best. The outside of the euro and the Swiss franc, the pound is not. Again, that's where maybe we can continue to pair currency pairs. I mean, take a look at how the good break came in the pound Swiss franc. So I mean, that looks a little bit extended here. So there's a lot of pairs that if I go through, they all sort of look extended to me here. So in that case, I think what we need to see is a little bit of consolidation. Then we can jump back onto those pairs. So Swiss franc crosses, again, right now, if you take a look at the CAD Swiss franc kind of following the same pattern, you can follow these same patterns. It's, just put the stop right above the previous high here. And as long as it continues falling, we can continue banking on that move. And as soon as the move is over, then we can just get out of the trade and our stops will take care of that. But that's really where we are in the technical setups. I want to highlight one of the important change in the technical setup was the Aussie Kiwi. And that really happened on that Kiwi report. So that Kiwi as inflation number, and you can see the Aussie Kiwi really jumped that day on a Monday and pretty much closing in the highs of that. So we have seen a big dramatic change in the Aussie Kiwi. So again, that's why Kiwi looked more weaker than the Aussie. So Kiwi is doing much better. So I think right now, if I have to really pick a pair, I think the Kiwi looks more weaker than the Aussie. If this pair started to reverse, then again, we can change the narrative. But for so far, I think we have to, if you're looking for any reversal, which we haven't seen this week, maybe next week we'll see something, then we can take a look at Aussie pairs. But Kiwi remains on the weaker side. And in that case, you can continue pairing even other Kiwi pairs like Euro Kiwi. I mean, look at that. Hourly and a daily chart just continue to move higher. It still have a little bit more room to run at 183 before it tests that previous resistance. Lastly, Euro Swiss franc. I mean, take a look at this pair. I talked about it last week, and you can see that it just continues to move lower. So we initially had a couple of day rally, and then we had a couple of days down. So the euro against the Swiss franc, so euro is more weaker than Swiss franc. So again, this is a market where you got to pay attention to these correlation and then make sure you're picking the right currency pairs. Euro looks weaker compared to the Swiss franc, and then we have Aussie that looks stronger against the Kiwi. So you can also play these pairings as well as long as they continue. But if you're really looking for the next big setup, I think what the next big setup is going to be probably in the dollar crosses as the equity market stays weak. I think that could act as a safe haven currency there as well. So here we are, bearish close. We'll have to continue looking at it on that side. So in conclusion, safe haven currencies, again, long safe haven currencies. This Middle East conflict continues on. We haven't really seen a big break or any sort of slowdown in escalation. So until then, we just continue on the risk off narrative and make sure you're focusing on velocity scores and make sure you're looking at what currencies in play. Have a good weekend ahead. Again, anything can happen over the weekend. There's a lot of developments again out of the Middle East, and those headlines will likely affect the market. So let's see how this weekend goes, and then we'll go into next week with the same outlook that we just discussed. And if we see a change, we'll make our outlook as well. Thanks everyone for joining. Have a good weekend ahead. Cheers.